Hello everybody, this is Lara with your first video for Bitcoin for the new year 2023. Happy New Year everybody. Bitcoin continues to go sideways. It's got weak range, it's got weak volume. It's like this market just died, but this is pretty typical behavior toward the end of a consolidation. It's like the winding up of potential energy, which is released, like a spring is released when we finally have a breakout. And there's a signal this week from on-balance volume at the daily chart level, strongly suggesting the breakout from the consolidation is going to be downwards. It's great when we get those signals from on-balance volume. They don't always work, but they work more often than they fail. I am still expecting a downward breakout and a low to form somewhere from 13,556 to 12,445.96. That lower edge is also a limit. I am still expecting that low of December 15, 2008, just above 3,000, to be sustained. I think the low for Bitcoin is coming up probably in January, maybe early February at the latest. Elliott wave analysis first, classic analysis last, and I will step back at the start of this year and look back at the monthly chart. This is the full price history of Bitcoin back from its inception in 2010. From this low to this high, there is a perfect 5-wave impulse. I am labeling this cycle wave 1. It lasted 7 years. You would expect a cycle degree wave to last from 1 to several years, and so 7 years for cycle 1 and 1 year for cycle 2 looks about right. And so I think this degree of labeling is correct. Within cycle 1, there is primary 1, an impulse, primary 2, a very, very deep zigzag. It is a 94% correction of 1. It doesn't look that deep because this scale is a semi-log scale, and this extreme market with extreme volatility has a very squished up look to it. If you view this on an arithmetic scale, you can see how incredibly volatile it is. But in order for the chart to make sense, we have to view it on a log or semi-log scale. And so an impulse for 1, a deep, deep zigzag for 2, an impulse for 3, which is extremely extended. It does not exhibit a Fibonacci ratio to primary 1, but it is 38.87 times the length of primary wave 1. Primary wave 4 is a time-consuming triangle. Its deepest portion, intermediate A, a 91% correction of primary 3. Again, very, very deep corrections. Primary 5 also extended in terms of price distance travelled, but not so much in terms of time. Primary wave 5 was a 15.87 length of primary 3, so even longer than 3. Following this huge bull market ending in December 2017, a bear market to end in 2018, lasting just 1 week shy of a year for cycle wave 2. This is an 84% correction of cycle 1. Again, Bitcoin's bear markets are very, very deep and they can be long lasting, but overall it's extremely obvious from this chart that the dominant trend is up. And so if 2 is over there, then 3 begins. Cycle 3 may only subdivide as an impulse. That will be labelled at primary degree 1, 2, 3, 4, 5, and it is extremely likely for cycle wave 3 to be extended, extremely likely for it to be longer than cycle wave 1. When third waves extend, they do so in price and in time, and it's like taking a squished up accordion and then stretching it out, and you can see the subdivisions within them at lower degrees. So primary wave 2 is probably going to be possibly even longer lasting than cycle wave 2. That would actually be okay if cycle 3 is a very long extension. Primary wave 2 may be nearing its end with one final low to come, possibly in January. It may not move beyond the start of 1 below 3191.3035. Let's take a look at the weekly chart. This low, the end of cycle 2, that huge bear market, lasting 51 weeks and 84% correction over here as a zigzag. From this low to this high, my main wave count will see primary wave 1 over here. This is an impulse, and it has a really good look for an impulse for Bitcoin. 1, 2, 3, 4, 5. 5 steps forward, followed by 3 steps back. That is the basic, simplest pattern in Elliott wave. This 5-step forward pattern is called an impulse. This 3-step back pattern is called a double zigzag. That's how it subdivides. I've got a lot of notations on this chart because Bitcoin, typical of cryptocurrencies, does not commonly exhibit Fibonacci ratios between its waves. So I've got a lot of notations on the chart to have a look at how long were its previous waves and how, in terms of price, and how long did they last. So intermediate wave 3 here is only 5.71 times the length of intermediate 1. Now normally for a normal market that would be considered quite long, but this is the shortest, larger degree third wave that Bitcoin has exhibited so far in its price history. That's important when we get to the next chart. I am seeing the structure of primary wave 2 close to completion. Intermediate W over here, the first zigzag. The first and second zigzags are joined by a 3 in the opposite direction labelled X, and the second zigzag intermediate Y labelled minor A, B, C with minor C, 1, 2, 3, 4, the final fifth wave down needed. I have a target calculated at 2 degrees. At 12,417, intermediate Y would reach equality in length with intermediate W. Now remember the scale, it looks like it's longer, but in terms of price distance travelled, it has not yet reached equal in length with W. It would do so at 12,417. Above that, at 13,556, minor C would reach 0.382, the length of minor A. That's this wave C would reach 0.382, the length of this wave A. And that would bring primary 2 within a normal range of 80 to 90% the length of primary wave 1. So the target zone would see primary 2 a normal depth for a large bear market for this market. Let's take a look at the daily chart. The high of minor B, off to the left of the chart. Actually, we're going to look at this low of minute 1 and this high of minute 2. We're zooming in now on the structure of minor C. Here's the end of 1, 2, a double combination, 3, a brief sharp impulse, 4, a double zigzag, and now wave 5 has to complete as a 5-wave structure. Importantly, minute wave 3 is shorter than minute wave 1. There's a core Elliott wave rule that states the third wave in an impulse may not be the shortest out of 1, 3, and 5. So when the third wave is shorter than the first wave, that tells us the fifth wave is limited to no longer than equality in length with the first. That limit is at 12,445.96. The fifth wave must subdivide as a 5-wave motive structure, and at minuet degree that will be labelled 1, 2, 3, 4, 5. 2 looks over here as a double combination, flat, X, zigzag. 3 may have begun. But if minute wave 4 is not over here and it continues further, it may not move into wave 1 price territory above 18,644.47. If we get a new high above this point, before we get new lows for Bitcoin, this main wave count would be invalidated in favour of my second alternate, which we'll get to last. At the weekly chart level, this wave count is an alternate. I judge it to have quite a reduced probability from the main wave count. Instead of primary wave 1 over here, what if it's incomplete? What if this is still 1, 2, 3? What if instead of 4 being over here, 4 is continuing? If it continues further, it can't move into wave 1 price territory below 13,826.76. That Elliott wave rule is absolute. A new low by any amount at any time frame, a fraction of a cent on a tick chart, a wick, it doesn't have to close below that point. Any new low below that point invalidates this wave count. I am actually hoping that it is invalidated with the next final low for Bitcoin, because at least then we'd have some clarity at the weekly chart level as to which wave count's correct between this one and the last one I showed you. This is quite a common wave count out there. A lot of people are working with this wave count, but the reason why it's an alternate, in my opinion, or my judgment based on experience, is this fourth wave is just too long lasting in comparison to its counterpart second wave for a normal look. This fourth wave is over twice the duration of the second wave. Now, it's pretty common for Bitcoin to exhibit fourth and second waves that are disproportionate in terms of time, but only if it's the other way round. And here's a perfect example. This fourth wave is really brief. This second wave is relatively time-consuming and deeper. That happens when Bitcoin's impulses form this very typical curved look, like a J. The fourth wave is brief and shallow because of the fifth wave that comes sometimes just before and just after being so strong it skews the fourth wave and pulls it up a little bit to be more shallow and causes it to be more brief than its counterpart second wave. So it's really unusual for a fourth wave to be the other way around. I've seen some examples, especially in bear markets for Bitcoin, but this is within a bull market. It doesn't have the right look. But a lot of people are using this wave count, so I'll follow along and judge its probability. This is a bullish alternate wave count. What if the bear market is over for Bitcoin? What would that look like? This wave count does not have support from classic analysis. For any confidence in it, we need to see a new high. Remember, by any amount at any time frame, one of the nice things about Elliott wave is most of the rules are absolute. And so a new high above 18644.47 would invalidate my daily chart, tell us a low is probably in place, and then we'd have to wait for a breach of this channel for really good confidence. We have strong confidence if we see this channel breached by upward movement, and then we can expect that primary 3 is in its early stages. Okay, stepping back and looking at the monthly chart. The last completed month for December 2022 is a little inside month, small range, weak volume. It's just weak. It's like the market just died in December as it just meandered slowly with no strength at all, weak volume. But we have got a bearish signal from on-balance volume on the monthly chart. It's a pretty weak signal though. This support line really only has, or maybe 3 tests. And it looks like on-balance volume might be breaking below support, giving us a bearish signal. And so I expect that the low is probably not in place. We're just not seeing any strength up off this low. And normally after a sustained low, we do see some strength. Here it moved pretty weakly sideways before it started up. Here's that J curve again. Here's another J looking curve. Slow start, accelerate through the middle, explode at the end. Happens again, slow start, acceleration, explosion. Bit of a slow start, definitely an explosion up here. So pretty normal behavior. It's also noted that in previous sustained lows on the monthly chart, volume does tend to increase to the low. It can increase further off after the low as well. A little bit of confusion here. This almost gravestone doji, although it's not in the correct context, but downward movement within the month here had pushed from volume. Volume for this month here to the last low of November does show an increase, but December shows some decline. ADX is declining. There is no clear trend at the monthly chart time frame. Bearish divergence between highs at the all-time high for Bitcoin as price made its final high up here. RSI failed to make a corresponding high. So RSI relative strength, the relative strength of this movement is weaker than this movement. Relative strength here was stronger, more overbought. Relative strength here, weaker. Didn't quite or almost reached or just reached overbought. So that's some bearish divergence. When RSI shows that price movement was weaker, then that's bearish. As a movement comes to an end, at the end it shows weakness. RSI now neutral, money flow neutral, also exhibited bearish divergence. ATR declining, which is absolutely normal behavior for Bitcoin's bear markets, and stochastics oversold. On the weekly chart, another small range week, almost an inside week, weak volume, weak range, there's just no strength up off this low. These last several completed weeks really do look like a consolidation within an ongoing downward trend. But at the weekly chart level, RSI reached oversold at this low back here. And here it's exhibited bullish divergence. And so price is moving lower and making lower lows, but RSI isn't making corresponding lows. The downward movement here was stronger, pushed RSI more into oversold. Here, downward movement was weaker. So at the end of a downward movement, this is bullish divergence. It shows weakness at the end of that price movement because RSI isn't making corresponding lows. And because RSI has only reached oversold on the weekly chart once before in 2014, that was associated with a low that's been sustained to this date. This is the second time RSI has reached oversold on the weekly chart, so this is actually pretty bullish. This divergence could develop into double bullish divergence before as low is found, but this is telling us that the low's obviously not here. It could be here, but there's too much weakness here. The next low is quite likely to be the final one of this bear market. That's what this is telling us. Not definitively. Again, everything I say is a balance of probability. We are not working with certainties. If we would, we'd all be billionaires, and that's not how life works, is it? Bullish divergence between price and money flow as well. ATR continuing to decline as price moves sideways is absolutely normal behaviour, and I always leave this here on the bottom of my weekly chart to show you that there is no reliable positive correlation between Bitcoin and the S&P 500, because I keep getting comments and messages from people telling me that I should expect it. Well, the math shows it just isn't there, so I'm not going to expect it. We need to always acknowledge our assumptions, and if there's a mathematical test when it comes to markets for our assumptions, I think it's a pretty good idea to use it. At the daily chart level, the moving average situation is again full bore bearish. The short is below the mid, which is below the long. They are all negatively sloped, and price is still below all three. This is a full bore bearish look. Now, moving averages are very much lagging indicators. Most indicators are lagging indicators, but when you have a moving average look like this, it tells you that the probability of bad things happening, of bearish movements following, is more likely than bullish movements. We don't have an inconclusive look, we have a full bore bearish look. So this supports my Elliott wave analysis that expects a downward breakout. And here's some pretty good support for it too. This virtually horizontal trend line on balance volume has multiple tests. It is long held, and on balance volumes broken below support, a back test of resistance, moving down and away. When on balance volume breaks out of its consolidation prior to price, sometimes it does that before price, and it tells us the direction price is going to break out. Now, this doesn't always work, but it works more often than it fails, and I love to see these signals from on balance volume. This is my favorite way to use it, when we can see breakouts prior to price. So this supports the Elliott wave analysis. It expects more downward movement for Bitcoin down to my targets. ADX is indicating there's a downward trend at the daily chart level. RSI, money flow and stochastics all neutral. Plenty of room for price to move below to lower lows, and ATR declining, absolutely normal behaviour to see declining range, which is a measure of volatility during a consolidation. So we'd expect to see 16,500 breached in the first instance. Below that, there's support 15,750, and below that, let's look at the monthly chart, 15,000, and below that, just above 10,000. That's all from me with your Bitcoin analysis to start the new year. I hope everyone had an awesome New Year's Eve and a pretty good New Year's Day too.